Hey, how's it going, guys? All right, so sorry for being absent yesterday. There just wasn't very many opportunities to play off of. Like we saw, like it was going our direction for a specific trade. We already, we already knew what was happening for yesterday, basically because of the TA today video we did before. But anyways, let's dive into what we see for today, because we do have a lot of potential opportunity coming our way. So I want to try to capitalize as much as I can off of it. Things are looking pretty bearish, and if certain things don't happen, we're likely going to see a huge drop to the downside, and I'll show you why in a moment here. Sec, guys. All right, so there's 6 charts behind me, but I'll go through each individual one here for you. The S&P 500, I have it on my chart because when you do pre-trade technical analysis, you should be watching like the S&P 500 because it correlates pretty strongly with Bitcoin, and it gives you a good a look on what's going on with the economy as well. Anyways, but things are looking bullish for the S&P 500. If we break this W formation, you see here, we could see prices go much higher. However, the second bottom is lower than the first bottom, so usually that means there's going to be more buyers exhaustion coming in place when it hits this resistance, and it may not break this resistance, so it could most likely go down and will create like a broadening wedge instead. But we'll see what happens. If it breaks to the upside and uses as a support, then awesome. Right now we're looking at the daily chart, so don't try to react quickly to this. We still got time before we find out whether we're going to get rejected or we're going to get support off of this resistance level. Going over to Bitcoin, this is the weekly chart on the far left-hand side. Right now we're building a parabolic curve. I'll let you see it a little bit better over here on this chart here. So we're building a parabolic curve, which is bullish. However, parabolic curves end, and when they do end, it usually plays off as a fishhook formation. If you're not familiar with the fishhook formation, it looks kind of like this. It usually happens after a large drop, and then it tries to retrace back the drop about 30 to 40%, and then it drops from people taking profits from the pump from the support bounce. And we might be having the same kind of thing. We have a lot better curve here, so the chance of it going to the upside is a little bit better. However, it looks like on the daily chart we're retesting it right now. So if we don't get the pump either within the next, I guess, 24 hours, we could see Bitcoin drop back down to its next level of consolidation. And the next level of consolidation is at 21,700. So if I see this break on the daily chart, I will look at, shorter time frames to dissect that information to tell me if we're going to continue to go to the downside. And I'll show you what I mean in a moment. So this is where we likely will drop first, right here, if we break to the downside. And if we break below this level of support, then we have to look at 19,200 again as a level of support. And I know that sounds like terrible or bearish, but sometimes these things have to happen in order for us to have larger bullish moves. And if we're trying to do predictive TA, where if we break to the downside here, and if we didn't get that, maybe we'll get a little tiny bounce, but if we end up breaking to the downside, we could end up, bouncing from this again, and then this will play off as a large W formation. So that's an example of predictive TA, where you can use the current price action that you have and the current levels that we're testing to give us an idea of what's about to form. So I'm going to go back a little bit, and I'm going to break this down into hourly chart. So we got, I got to erase that, sorry. So we got this parallel curve right here. I'm just going to adjust the candle so it's easier to read. So there's 2 things that could play out that will help go with that prediction I just made. So if we end up breaking to the downside off of this diamond formation, and you might not be familiar with the diamond formation, so I'll draw it out really quick for you. They're very hard to trade off. They're easy to trade off of, but they're hard to spot. So you'd have something like this drawn on your chart. We'll get the broadening wedge, and then we got volume dying again. So we had volume growing, the volume dying, and it creates these diamond formations you have to watch out for. They're typically reversal patterns, And how you get the technical target is you grab from the top center part of the formation and you put it down to the support line. And the moment you get the breakout is where you put the trend line. And some technical analysis traders will put it right at the tip of the formation, so we'll do it like that for now. And then when you get the breakout, you can just shift it right to the breakout point. Anyways, let's put it here for now, because that's a conservative target, and we want to be conservative with our trade, so we're not too greedy. So clone that. So now we have two technical targets that we need to take a look at. So if we end up breaking to the upside and we see a support bounce, we'll have this technical target. I'm just gonna do this. All right. So we'll grab our long position tool. If we end up breaking to the upside, we'll get a technical target like this. Our stop loss should be right below the local support level. And we'll get a 1 to 3.68 risk to reward ratio, so that's definitely worth it. However, if we break to the upside, there's a few things you have to pay attention to. The local level of resistance right here, that could cause problems. So if you start seeing like a bearish formation play out in lower time frames, like the 5-minute chart, and it starts breaking to the downside, take your profits, basically. That's how I'll be doing it. Same with right here. This is still a local level of resistance right here. That could prevent us from hitting our technical target as well. Same scenario. If I start seeing price action in the lower time frames develop a bearish formation and we break to the downside, take my profits. So that's the scenario if we break to the upside. All right. However, if we break to the upside and we start seeing support off of this level of resistance, this could play off as a W formation and make us continue even further. So with this scenario, what I'm going to end up doing is I'm basically going to use my stop loss as my take profit tool. So I'll take some profits like manually here if I see a bearish formation, but I'll have my stop loss in place right below this support level as we get up. And if we end up using this as support, I'll use my stop loss tool and put it right below it as well and try to ride it as much as I possibly can from this potential W play out, which would give us I can just grab one of these trend lines because it's the same measurable target. That gives us a larger technical target of 24,400. So this is like the absolute most bullish thing that can come out of this scenario when we're riding along this parabolic curve here. Now if we come up and this ends up becoming a resistance, we could end up building a giant double top, and that could bring us down. If we end up breaking to the downside instead of breaking to the upside, what we would have to look out for is, a confirmation bounce to the downside. We'll have roughly the same technical target. Let's see, I'll grab the short tool really quick, and I'll put it right here. I'm sorry, it's going to overlap. Actually, I'll just delete this. You have this information now. I'm going to put the stop loss tool right here. If I enter off of support, resistance, rejection, roughly around here, and technical target will be 1 to 2, basically. So I would take this trade as well. However, if we get a strong rejection, I would put my stop loss immediately after the rejection, right above that rejection point to enhance my risk to reward ratio to a 1 to 6 or better. So that's everything for the diamond formation. I'm sorry I dissected it so much for you, but if we end up breaking to the downside here, another thing we have to look out for is we end up breaking this level of support right here, because it's active resistance here, support here, support here. If we end up breaking this, then what might end up happening is we build a giant double top here, this being the neckline, and it comes down, and if we break this neckline, then we could stay in the short. I'll stay in the short position, and then I'll ride it as much as I possibly can. Kind of the same scenario with the double, potential double bottom here, the W playing off this diamond. I would basically use this diamond to try to get a better short position for a potential double top and ride as much as I can to the technical target, which would be conservative 17 8,600. So basically, right at the all-time low again of this bear market, of this current cycle. So this parabolic curve break could give us enough momentum to go right back down to retest this. So for those who may be in a long position around these areas, you're not safe if this ends up happening. Yeah, that's pretty much everything I've got for you with Bitcoin. I know I dissected that quite a bit, so I'm going to lower that and I'll clean up my chart later. Going over to Ethereum, same kind of concept. So we got this uptrending level of support, and if it ends up breaking, we will have a double top play out on the daily chart. I'm going to open it up here for you. Now the double top, this one will give you a relatively bad risk to reward ratio because you should be putting your stop loss right above here, but this is the daily chart, so that's going to give you a huge gap. So let's dissect it on the hourly chart and see what's happening. If we got like a bearish formation playing out, that could bring us down. So in lower time frames, it's showing that we're below it, but that doesn't really mean anything. You have to wait for the daily candle print if we're looking at the daily chart. Bearish formation could be playing off here. Let's take a look. We got a descending triangle. Yeah, we got about descending triangle right here. So if we break to the downside, what we're going to look for the technical target is something like this. 1540. That's $1,540 for Ethereum, and it could break this neckline right here for this smaller double top and bring us down further. If we get the conservative target for this little micro double top, we can go down to 1462. That's pretty rough, honestly. If we break to the upside, let's see, we'll just have to look out for local resistance. Something like this. Yeah, so I wouldn't enter this as a long because it does look like the risk to reward ratio isn't very clean. Let's take a look. So we end up breaking here. Long position, short will be, the stop loss will be roughly around here. Most recent swing low. So the risk reward ratio is decent. However, we do have like this horizontal level of resistance here that we have to look out for as well. Let me grab this horizontal trend line. So it acts as support here, and it's acting as resistance here. So we may have to look at this level here as a potential area where we need to take profits a little bit sooner. Now this is a 4% gain. However, it's probably cut in half. Oops, sorry. Probably cut in half if we end up seeing resistance here that will influence us to take profits a little bit sooner. But either way, there's going to be a lot of volume coming in for either direction. So if we break to the downside, it's going to be a ton of volume because we'll be breaking a parabolic curve. If we break to the upside, it's going to be a ton of volume because we're getting a support bounce off a parabolic curve. This is Ethereum. So this is just a trend line bounce, but it's still same kind of situation. We're going to have a large amount of volume, mostly to the downside if we break this uptrending level of support. But the upside volume is not going to be as strong as the downside volume if we break to the upside because of all this local level resistance that will create a psychological effect where people will be more hesitant to enter when there's that much resistance above them. All right, guys, I'm over my time. If you have any questions, you can reach out to me in the Discord. I'll do my best to help you out, and you have yourself an amazing day. And if this helped you out, please subscribe. But none of this is financial advice. All right, see you guys.